Well, I think I'm going to get started. And then if anybody joins us, they could catch up with what we're doing. What I'm going to do shortly is share my screen to you, and you will be able to see the answer key, and we're going to go through each part of problem 229A. And I even added some financial statements so that you can practice those one more time in preparation of the test. At any time, if you have a question, please enter it in the chat area, or if you have audio, you can, always ask me a question. But try to do it through the chat. It'll ding in my ear that somebody has a question, and I'll be able to address it. All right, so I'm going to share my screen, and I know I got lots of stuff open here. And let me find, what did I do with it already? There it is, okay. I'm going to share this. Okay, so this is our answer key for problem 229A. So Vince York practices medicine under the business title Vince York, MD. During July, the medical practice completed the following transactions. Remember, there's a listing all the time of all the assets, liabilities, and parts of equity, stockholders' equity, that are available to use when you're recording the transactions, the different accounts. We call that the chart of accounts. So when you're reading the transaction, if you weren't sure, what account do I use? You just refer down to that list and you'll see all those items. You'll have that for your test on Thursday. So let's start. We have to make a journal entry for each transaction. July 1, York, the owner, contributed $63,000 cash to the business in exchange. Oops, I have my wrong book. Hold on a second. Same book, same problem, different type of company. Hang in there, hang in there. I'm probably even on the wrong page with this. Yep, I should be on page 101. Okay, contributed $63,000 cash in exchange for common stock. So July 1, okay, and in our post reference, you can see it's on the other side of this. We could put an A there. So if you have it right next to the date, that's one area they'll put the reference. And sometimes they put it on the other side of the debit of the account you're going to debit and credit. It's just semantics. It doesn't matter which side it's on. The important thing is that you know how to debit and credit. So you have to go through those steps. First, ask yourself, what was affected in this transaction? The cash came into the business, and the company gave stock to York, the owner. So the cash account is affected. It's increasing because there's more cash coming into the business. Cash is an asset. The rules for an asset is to debit an asset when it increases. So we write cash and $63,000 in the debit column. Common stock is being sold to York. So that means the common stock is increasing. The amount being sold is increasing. We want to keep track of all the dollar amounts we get whenever we sell common stock, we being the company, in the common stock account. So we must increase that account. Its role is increase common stock on the credit side. Okay, so don't forget, we usually indent the name of the account that we credit a little bit, and we try to put the debits first and the credits second. Don't get too caught up in that. It's just a general kind of thing you could try to remember. Okay. Now, as I said, if you have any questions as we're going here, let me know. I'm going to go to the next one. The company paid monthly rent on medical equipment, $510. So they paid rent on medical equipment. Now, it doesn't come out and say paid cash, but that's the assumption. If they're paying cash. So the cash asset is decreasing. Why'd they pay cash? For rent. Rent is an expense. We must accumulate all the dollar amounts we have for rent expense for a period of time in that account. So we increase the rent expense account, and that increases on the debit side. all expenses increase on the debit side. Cash is decreasing. It's an asset. An asset decreases on the credit side. And I'm going to make a little B there to identify that as my journal entry B. The July 9th, the company paid $23,000 cash to purchase land to be used in operations. So what was affected? The land was affected and the cash was affected. Since they're buying more land, they're buying more of the asset land, they must increase that asset. It increases on the debit side because that's the rule. They're using the asset cash to pay for it. So cash is decreasing. You decrease assets on the credit side. So the credit will be to the cash T account. And in our journal entry, that's how we would show it. I'm going to keep moving if I don't hear any dingings that somebody has a question. July 10th, the company purchased office supplies on account, $1,600. Well, you could see the resulting journal entry, but think it through. What was affected by this transaction? Office supplies, because that's what they bought, but they didn't pay for them. They bought them on account. So that means they owe on those. So we're going to increase the office supplies asset on the debit side. Since they owe on those, we have to find a liability account. Well, accounts payable. So we'll increase the accounts payable liability account on the credit side to show we owe that money. July 19th. The company borrowed $22,000 from the bank for business use. So it doesn't come out and say they borrowed cash, but that's the assumption here. So they increased their cash in the business by $22,000. It's an asset. We increase assets on the debit side, so cash will be debited $22,000. They increased their cash because they borrowed money. So as soon as they borrow that $22,000 from the bank, which is a loan, we would increase the liability notes payable. Remember, notes payable is where we keep track of amounts we owe on loans. It's a liability. We increase it to show we owe more on the credit side. You're going to hear my dog bark in a second. July 22nd, the company paid $1,100 on account. He's looking out the window at the other dogs in the neighborhood. Okay, July 22nd, the company paid $1,100 on account. When a company pays on account, the question is, well, what does that mean? What liability? That always means they're paying on accounts payable. So they're paying the amount they owed that they stored in the accounts payable liability account. So they're going to have to decrease accounts payable because they don't owe that anymore, decrease the liability on the debit side, and they're using cash to pay for it, so decrease the asset cash on the credit side. Any questions? Okay, I don't see anything. Uh-oh. Sorry, did I miss something? Oh. Okay, Sheila, I see. So when we borrow money, it's a loan and we put it under notes payable. That's correct. When it's from the bank. Okay, cool? You betcha. All right. Whoops. I'm going to try to, let's see if I can get that little chat room box over. Ah, look at that. All right. Now, hopefully if anybody has new questions, they'll pop up for me right there. The next one, on the 28th, the business received a bill for advertising in the daily newspaper to be paid in August, $240. So they advertised in the paper They got the bill, and now they're going to pay it, not now, but next month. So we definitely have advertising expense because advertising is the service we receive to provide our product or service. So advertising expense must be increased to reflect that we had this expense. We're not paying it today. We're going to pay it next month. And this company has its own liability account to track any advertising amounts they owe. So they keep track of it in the liability account, advertising payable. So they'll be crediting or increasing that liability account. Now, if they didn't have advertising payable, they would have just used accounts payable. Any questions? All right, let's go to the first one and the 31st. Revenues earned during the month included $6,400 cash and $6,000 on account. So this one usually jazzes people up a little bit. So this company has earned two revenues. One, not different types, but it's still service revenue. They provided service and they got $6,400 cash immediately. And then they did services and $6,000 was on account. So the customers from the $6,000 owe them the money. So we have to increase the asset cash for the $6,400 we received immediately, increase the accounts receivable asset on the debit side for the $6,000 that is owed to us, and then increase service revenue on the credit side because that's the total amount that was charged to the customers. $6,400 we received in cash immediately, and the $6,000 that is owed to us. So that's how you would tackle that transaction. Are there any questions on that? Could you just excuse me 1 second? I'll be right back. Okay, I'm back. Sorry about that. And are there any questions? All right, let's go to the next one. Paid employee salaries, $2,200, office rent, $1,900, and utilities, $560. And it says recorded as a compound entry. That means recorded as one journal entry. Don't make a separate journal entry for each item. So instead of increasing salaries expense on the debit side and decreasing cash on the credit side for $2,200, and doing that for each individual expense we paid with cash. No, increase each expense on the debit side. You have more of those expenses. Remember, we're trying to accumulate all the expense we have under each category. So salary expense in the debit column, rent expense in the debit column, and utilities expense. Decrease the asset cash for the total amount you paid out with one amount, $46.60. So those three items added together is the total amount of cash we paid in that transaction. So that's what they mean by a compound journal entry. It's one of the few times we could take a shortcut in accounting. Any kind of questions on that? All right, let's go to J, the next one, which is my J. The business received $1,120 for medical screening services to be performed next month. Now, we've talked about this. We already saw this type of transaction. Here, the company's getting the cash today, so they must increase their cash account, which is an asset. They do that on the debit side. But they did not perform any services yet. So they cannot call this amount service revenue. They didn't do anything. They owe this service as of today. So we increase a liability account, unearned revenue. Be very, very careful. People see that word revenue and they think, oh, that's a revenue account. No, it's not. It's a liability account. It's where we store revenue that we still owe, unearned, not earned yet revenue. So we'll increase that liability on the credit side. The final transaction we have in this problem deals with dividends, paid cash dividends of $7,200. So whenever the company pays a dividend to the owner, we will increase the dividend account so we can collect all the dividends paid to that owner in that account, and we increase that on the debit side. They paid cash, so we have to decrease the asset cash, and we do that on the credit side. Now there's no totals here, but I encourage you to always add up the debit side and the credit side to be sure that debits equal credits at this point. Is there any type of question on any of the analysis of this problem so far? All right, guys. Then what I'm going to do is go to the next step. And I'm not going to be able to make you crazy, dizzy, and me if I keep flipping back and forth from the journal entries back down. But remember, the second step, and I'll go through each journal entry here, is to transfer or post each journal entry you just completed into the respective general ledger account in the general ledger, in the respective T account, I should say, in the general ledger. Now, your author in the answer key used dates as a reference. I like to use my reference letters. So either one will do the trick, just as long as you reference the dollar amount in the general ledger and you determine a balance in each account. So let's go through. So whatever happens in the journal entry, that's what you put in your general ledger. So July 1, the journal entry said, on the debit side of cash, put $63,000. So there it is. On the credit side of the common stock account, put $63,000. Remember, debit's on the left, credit's on the right. Each T account is set up that way. The second transaction, on the debit side of the rent expense, $510. On the credit side of cash, $510. The next journal entry, on the debit side of land, $23,000. On the credit side of cash, $23,000. The next transaction, on the debit side of office supplies, $1,600. On the credit side of the accounts payable T account, $1,600. The next was the debit side of cash, $22,000, sorry about that. And on the credit side of notes payable, $22,000. On the next one, on the debit side of accounts payable, $1,100. And then on the credit side of accounts payable, $1,100. The 28th, I'm going to have to go down a little bit. There we go. On the advertising expense, debit side, $240. Go back up. Advertising payable, credit side, $240. The next journal entry, on the debit side of cash, $6,400. Debit side of accounts receivable, $6,000. Credit side of service revenue, $12,400. Then we had our compound journal entry, debit side of salaries expense, $2,200. Debit side of rent expense, $1,900, and debit side of utilities expense, $560. Credit side of cash, there it is, $4660. Almost there. The next journal entry, debit side of cash, $1,120. On the credit side of unearned revenue, you're going to put $1,120. And then the debit side of dividends, $7,200. Credit side of dividends, or cash, sorry, credit side of cash, $7,200. So now you've just completed almost the second step, which is transferring or posting each journal entry into the respective T account in the general ledger. Are there any questions before I start finding the balances? Okay, so to review how we find a balance in an account, first we're going to start with the cash T account. Let's add up all those amounts in the debit column. 63,000 plus 22,000 plus 6,400 plus 1,120. And we get 92,520. We're going to do the same process on the credit side. Add the 510 to the 23,000 to the 1,100 to the 4,660 to the 7,200, and we get 36,470. Subtract the smaller side, the credit side of 36,470 from the larger side of 92,520. And we get a balance of 56,050. The balance will go on the side that had the larger total. The debits were more, so that's where the balance will be entered. Accounts receivable only has one transaction, so that's its balance. Same with office supplies and land. So we do normally draw a line and re-enter the dollar amount with BAL representing balance. Now to the liabilities. Accounts payables, credits are 1,600, debits are 1,100. Subtract the smaller side from the larger side, giving us a $500 balance on the credit side. Advertising only has one item, unearned revenue, notes payable, common stock, dividends. So we just bring down that amount and it's its balance on the proper side. Salary expense, there was only one transaction affecting it, so that's its balance. But rent expense, there's two. We add them together. That's its final balance. That's why I said we are accumulating all the rent expense, and we do that on the debit side by increasing it. Come on, hurry on. Sorry, guys, give me a second to get my dog in. Okay, it's driving me a little batty. Okay, utilities expense, there's only one debit, so that'll be its balance in advertising. Okay, so now we're complete with the second step. Any type of questions? Okay, guys, I'm going on then to the third step. Oops, where's my answer? There it is, which is the trial balance. Remember, and you must know the definition of a trial balance. It's a list of all the accounts with their most current balance. And I call it the summary sheet. It's taking all this summary information we just created in the general ledger and putting it on one piece of paper right in front of us. So we're going to start with Vince York, MD, trial balance. Here's the balances of its accounts on July 31st, 2018. Please keep in mind, two things I'm looking for on the test. You put these accounts in a certain order. Assets should be grouped together and listed first, then liabilities. So assets, liabilities, common stock, dividends, revenues, and expenses. So if you list them out of order, I take points off. If you do not find a debit and credit balance, final totals, and if you don't find those, points off. Okay, but this is more transferring. So I'm not going to drive you crazy going back and forth here. But if you look at your T accounts that we just created, that's where you're getting the information. So cash, debit column, balance $56,050. Accounts receivable, $6,000 debit balance. Office supplies, $1,600 debit balance. Land, $23,000 debit balance. So there's all of our assets listed together. I don't care what order they're in, just as long as they're all listed together in first. Then we're going to list each of our liabilities. There they are. Advertising payable, credit balance of 500, or I'm sorry, accounts payable, credit balance of 500, advertising payable, credit balance of 240, unearned revenue, credit balance of 1120, and then notes payable, credit balance of 22,000. Remember, those are the balances we just determined in each T account. Common stock, credit balance of 63,000. Dividends, be very careful of this. Debit balance of 7,200. Service revenue would be next, credit balance of 12,400. And then each expense is next, grouped together, just as long as they're all listed. I don't care what order the expenses are in, just as long as that group is presented last. Salaries expense, 2,200 debit. Rent expense, 2,410 debit. Utilities expense, 560 debit. And advertising expense, 240. So we now have listed all of our items in our general ledger with their balances. Add up all the debits. They should total 99,260. Add up all the credits. They'll equal 99,260. Okay, so that's our three-step process. And in my email, I said you will do that three-step process as a problem on the test. Okay, so that's one of your problems. I'm going to give you transactions, the templates for a journal, T accounts, and a trial balance. Might be 6 or 7 transactions. You'll make the journal entries, post them to the T accounts, find the balances, and then create this trial balance. Any questions before I go to the next part, which I didn't ask you to do, but in class I would have. I can't get my, there we go. Come on. Oh, there we go. No questions, no questions. Okay, no questions. Okay, cool. All right. So the other part of the test, problem-wise, will be asking you to complete the 3 financial statements that we really started learning back in Chapter 1. The income statement, statement of retained earnings, and the balance sheet. So I'm going to use Vince York, MD, and that's what I'm going to do. I'm going to give you a trial balance for problem 1. It's not going to be the same information as in problem 2. I'm going to say, here's a trial balance, create the 3 financial statements. Okay, so I'm using Vince York's trial balance here to do that, and I don't have it finished yet. So we'll work on this together. So we have Vince York, MD, income statement, and I'm looking for the time period. His income statement, and remember, an income statement is for a period of time. Month ended July 31st, 2018. Now remember what goes on an income statement? Revenues and expenses. So we're focused only on the items right in here on our trial balance, the ones I have highlighted right now. So one other thing to remember is on an income statement, one column is not the debit column, the other is not the credit column. We learned this financial statement in Chapter 1 before we even started talking about debits and credits. We have 2 columns because of the way we subtotal and then determine finally net income or net loss. So we're going to start with revenue, indent a little, and put service revenue. And since there's only one revenue, we'll put the total out on the left-hand side, or I'm sorry, the rightmost column, There we go. Next, we'll do expenses. Now, since there's more than one expense, we're going to list the dollar amount on that inner column. So we're going to write each expense, salaries expense, dollar amount. First one, 2,200. Then rent expense, 2,410. Then we have utilities expense, $560. And then our final expense, advertising expense. I keep doing that same error when I do expense. $240. Okay, so I've now gathered all of the revenue and expense information from, oops, I'm gonna need one more thing here. Okay, curses. Okay, well, we'll work with that. That's our final expense. So I'm gonna underline, and now I'm gonna add all my expenses up and list the total expenses underneath that total revenue amount. So 2200 plus 2410 plus 560 plus 240. Total expenses are $5,410. Now, let's see if I can maneuver this a little bit. There we go. I'm going to put an underline underneath my total expenses, subtract my expenses from total revenue. So 12,400 minus 5,410. I have a positive 6,990, which we call net income. Don't forget, double underline your net income to indicate you're done with that financial statement, final amount for the month. So the company profit was $69.90 for the month of July. So I'll leave that up there a second. Any kind of questions on that? Remember, you don't see unearned revenue on this because it's not a revenue. Not on the income statement. It's a liability. Liabilities belong on the balance sheet. Okay. Well, I'm going to move then to our next financial statement, which would be the statement of retained earnings. Now, I might have to go back and forth here a little bit, but we'll get it down. So Vince York, MD, statement of retained earnings, same time period, month ended July 31st, 2018. Remember, we're determining how retained earnings changed for a period of time. So we must start with where it was at the beginning of the month. So we'll put retained earnings July 1. Well, as of July 1, in a brand new business such as Vince York MD, there are no beginning retained earnings. There were no earnings before July 1, so there's nothing retained as far as earnings go. But now the company has started making income. And net income for the month of July, which we just figured out on the income statement, can be added. Oh, well, now we have some retained earnings, 6,990. We will add the beginning balance, which is 0. Whoops, that's just a single line BTW, to the net income of 6,990, and we get like a little subtotal. The only other item that affects retained earnings are dividends. Remember, net income is the profit the company made. Dividends are payments of those profits to the owners. So any dividends that were incurred during the month and would be kept track of up here on our trial balance, 7,200, must be subtracted. Now, this isn't normal. It's not really normal for a company to pay out more in profits than it makes. But in a theory world, sometimes that happens. So what we'll do is we'll put retained earnings, July 31st, and it will actually be a negative $210. That's not normal, but that's how ours works out. So retained earnings will actually have a negative balance in our problem. It's usually a positive. And we have to indicate that with those little brackets. So the company made $69.90, but they paid out $7,200, a little too much. So that ends up having a negative impact or a negative balance in retained earnings. Are there any questions? Come on, you. Trying to get my, okay. No questions, no questions, okay. Anything else? Okay. All right. Let's go to our final financial statement then. Oop, got a question, that's cool. Yes, you would. You would add the beginning balance of retained earnings on July 1, assuming it's positive amount, to the net income for the month, Sheila. You're absolutely right. Okay, if there's nothing else, just make sure. You cool on that, Sheila? Come on. Awesome. Okay, let's go to our balance sheet. Vince York, MD, balance sheet. Remember, this is always as of a specific date, so it would be July 31st, 2018. On the balance sheet, remember, we are listing assets, liabilities, and stockholders' equity. We'll start on the left side. We're going to list the assets. Okay, so I'm going to scroll back up because I didn't take a printout of the company's assets. So here's what I'm focused on, guys. Matter of fact, I'm going to see if I could copy and paste it so I don't drive you crazy. There we go. So cash, balance of $56,050, accounts receivable $6,000, office supplies $1,600, and land $22,000. Now, when we do that, don't forget we want to total them up. So we're going to add the $56,050 to the $6,000, the $1,600 to the $23,000. And we will have, and so you know that's a single line right there, 86,000. Oh my goodness gracious. That is a bad font, huh? Let me see what this font is. So let's make it all the same. Times Roman numeral, come on, Times New Roman, and we'll make it a 12. Okay, so this will be 86,650. Let me try to make that nicer. There we go. Double underline that. Clance. There he goes. No bark. Okay, so we're done with the assets. Now we can go over to the other side of the balance sheet and list our liabilities. Again, we're going to go up and go to our trial balance and list all the liabilities that are on there. Oh, there's 4 of them actually. I'm only highlighting 3. So we have accounts payable, advertising payable, unearned revenue, and notes payable. And I don't know if my copy and paste will work out this time. I doubt it, but you could try it. I'm going to create another column on me. There it is. Oh, well, so much for that idea. So let me do this and just copy the names. There we go. And then I could copy the dollar amounts, 500, 240. Okay. So there's the names, and let's get the dollar amounts. Okay. And there's the dollar amounts. Okay. And then we're going to total those up. So we just grab the liabilities off of the trial balance, list them on the balance sheet, add them up. Remember from chapter 1, we didn't even have any liabilities. Now we got 4 of them. And see that unearned revenue? It's listed with all the other payables. It is a liability. plus the 240 plus the 1120 plus the 22,000. And we will get, let me change my font so it looks a little prettier. Jives together here. And we will have 23,860. Okay. Now, the next area, of course, is stockholders' equity. Remember, there's only two items we need to list in this area. The first being common stock, and my sharp memory here remembers that common stock has a credit balance of $63,000. So that's what I enter as my balance. And then retained earnings, which we just figured out that balance as of July 31st, negative $210. Okay, so that should be a single line. We will now take and add those two, well, subtract actually the retained earnings from the common stock and get total stockholders' equity. Which will be $62,790. Versus, hold on one second, let me try to see if I can, oh, I better not. I'll be messing up the whole system here. Let me try doing this, see if I can brace this up a little bit. So I could bring the balance sheet up. I'll get that back on visual for you. Just not working out for me. Okay. So right now, that's where we're at. I need to put one more, and I apologize for it. The lines being a little messy here and advancing to the next page, but the final line of our balance sheet should be total liabilities and stockholders' equity. We're going to add the liability amount of $23,860 to the $62,790, and that equals what it should, $86,650. So assets equal total liabilities and equity of $86,650. So I'm going to draw a little underline underneath my stockholders' equity to indicate I was doing some adding there, and then double underline my overall total of liabilities and stockholders' equity. So I do apologize for these pages, whoops, coming apart here, but it is what it is. Okay, I don't want to go messing around, I'll screw it all up. You get the point of it. And this is a nice, really good comprehensive look at creating that balance sheet. Do you guys have any kind of questions? Wow, I spent some time here, didn't I? We spent some good time together going over all of these requirements that you will have to do for that test on Thursday. Again, let me go back down here so anybody who needs to finish that up can. Okay, so I'll just give you a few minutes to wrap that up. I'm just sitting here. I'm waiting to see if anybody has any questions. You need anything looked at again? You need some confirmation on anything, guys? When there's silence, that must mean good things, right? I hope. If you're trying to think of a question, okay, thanks, Seth. If you do think of something between now and Thursday, don't hesitate to email me. Remember, there's two problems on the exam. One, completing the 3 steps of journal entries, posting, and a trial balance. The second being having a trial balance and creating these 3 financial statements. And then you'll have about 15 to 20 multiple choice based more on the vocabulary and theory. Some of the stuff we may not have gotten a chance to go over, and I asked you to listen to some of the voice lecture, do a good reading, especially in chapter 1 I'm talking about, in the beginning of the chapter. So take a look through that information. And I think if you are able to do the vocab and feel comfortable with these problems, you'll be in good shape for Thursday. Also in my email, I indicated that I would like to have some class time. I usually try not to, but because of how it all worked out today, I'm going to need to, because I was going to start just a little bit of chapter 3. So it's not going to be anything really heavy. It's just going to start introducing us to chapter 3. So next Tuesday when we come in, we're ready to rock and roll, and we're not spending time on overview of chapter 3. Okay, so if I don't see any other questions, we are done. I thank you all for attending, and this will be recorded. So, yeah. Yes, we will. It's designed to be an hour, your test. So we would be able to get it in. We just wouldn't have class afterwards. So if we are on a compressed schedule on Thursday, guys, still plan to come for the exam. If there's, extenuate, I don't think we're going to be from the stuff I've been seeing. I think we're going to be okay weather-wise, but you never know, things could change. If something happens that you just can't be on campus, we could schedule a makeup. I don't want you to risk your life to come and take an exam in accounting. It's in the big picture, it's not worth it, right? So you make that call. Just let me know so we could reschedule it. Also, bring a number 2 pencil and your calculator. Don't forget, no cell phones for calculators. All right? So I'll have this recording, a link so that you can come back and revisit it in Canvas. And if there's nothing else, then thank you, and I'll see you Thursday.